Hey, Richest Money Maniacs, welcome back. In this video, we're going to talk about how much it's going to hurt to be an investor in Hertz. Yes, I said that. Let's get to it. Hey, Richest Money Maniacs, Tom coming at you. In this video, I want to talk about a little bit of the topic that I kind of covered in another video, and that is what it means to be a retail investor, except this time I want to talk about a very specific example. In this video, we're going to talk about Hertz rental car company filing for bankruptcy. What does that mean exactly? It means that due to the current economic climate and the health challenge that's plaguing the whole planet right now, and of course the economic shutdown of all of commerce in the United States, Hertz rental car basically can't pay its bills. It owes more money than it's bringing in. It owes more money than it holds in assets. And we're talking about a multi-billion dollar company. So what does that mean? That means that they owe money and their creditors are coming after them, but they don't have the money to pay, even if they liquidate everything. So what do? Well, basically, usually people just go out of business, and then other company comes up and says, oh, well, we can do it better. We'll take over the assets through the court proceedings, and we'll get things at dirt cheap, and we'll run the company more efficiently, maybe even more conservatively, not take as big risks, and we won't expand too fast, and we'll grow the business to be a healthy and have a strong, solid foundation, which will attract more interest in terms of investing in the company in the future. So, but also as an investor, if you own Hertz, now as a retail investor, if you own Hertz stock, that means that if they file bankruptcy, your stock is worth zero, usually. But something very strange has happened. And now keep this in mind. All of the assets for a company that goes bankrupt become basically available for creditors to take apart and get as much out of as they can, because they're the ones that are owed the money. And so the courts will always, when you go bankrupt, you go to court and you file for bankruptcy, and the court has to grant you bankruptcy protection. It allows you to restructure a corporation and do all kinds of fancy legal things to be able to kind of give value back to the creditors and maybe let the company continue forward with new leadership or restructuring or rebranding or even renaming it or just tearing it apart. There's a whole bunch of different things that can happen. However, typically when a company, especially one that big that's traded on the public market, goes bankrupt and actually files for it, they're pulled from the stock exchange. Hertz being, of course, on the New York Stock Exchange. They get taken off of the New York Stock Exchange because it's ludicrous for them to be on the market and sell shares in a company that's bankrupt, because the shares are worth zero. Except that in this crazy, insane, completely delusional world where the Federal Reserve is the only thing still propping the stock markets up from completely crashing, which they're going to do anyway, because they can only prop it up for just so long, because fake money is just still fake. It's still a house of cards. People have become conditioned to think that it's a good idea to rush into a company if they're big enough, if they're too big to fail, because they know that the money is going to suddenly come in from somewhere. They don't know where. Most folks don't even know it's just the Federal Reserve that's pumping money into the market. So they think magically what happens now is that when a big corporation, a multi-billion dollar international corporation, files for bankruptcy, that immediately governments are going to sweep in and central banks are going to sweep in, and they're going to keep that stock price up. In fact, they're going to make the stock price go up. So they're investing based on a false premise. These retail investors are rushing into these large corporations who are going bankrupt, or like Hertz, who are already bankrupt and legally should not be selling shares at all. Yet somehow their stock is still selling at around $3 a share. I think that was the article I read, $3 a share. They shouldn't even be on the market at all. They're bankrupt. Here's what's happening if that's allowed to continue. Because Hertz, apparently, legal department, is fighting to be able to keep their name on the stock market and keep the ability to trade shares on the stock market. Why would they do that? Well, because any retail investor, which is you or me or anybody who buys the stock after it's initially offered on the stock market and not before in an initial price offering, anyone who invests in that Hertz stock right now or any other bankrupt company is basically taking their dollar and not getting a stock in exchange for it. What they're saying is, I'm going to give you this dollar so you can give it to your debtors. Because the debtors now in bankruptcy own the company. They own Hertz and they are dismantling it. And the shares that you held because they're bankrupt are worth nothing. Now, when that dollar goes from you to Hertz to the debtor, it has absolutely no legal requirement to give any value back to you at all. Because guess what? Your share is still worth zero. You paid $3 for a share of a company that you will never get any value back for. Now, every once in a great while during a bankruptcy, when things are liquidated, sometimes the creditors get all of the debts paid off, and then there's a little bit left over to be able to distribute amongst the shareholders, right? Just a little bit. Do you really think it's going to be that much, though? Is it really worth the risk of investing? Because you're talking about billions of dollars owed, and it's growing every day. More and more debt, more and more interest, because guess what? They don't have enough assets, even if they sold everything, to cover all their debts as it is now, and they're still getting further and further into debt. Yeah, because they still have buildings they have to pay leases on. They still have to pay insurance for their cars, for their buildings, for their employees, all the unemployment they're paying. All of those bills continue to build day after day. That's why they need bankruptcy protection, to stop that from becoming completely out of control. So their debtors are coming in and liquidating everything. I mean, they're selling their cars for dirt cheap, and it's not even really cheap enough. Remember what people do to rental cars, right? Bringing $1,000 off the cost of a rental car? No thanks. You sell it to me for $250, okay, I'll consider it, because I can sell it more. I can sell and make more from the parts. I'm not going to drive a rental car around. They're way too beat up. People don't treat those cars well at all. I would never buy a rental car. In fact, I did once, and I paid the price. I was sold a lemon by Enterprise. I'll never buy from them again. So I learned my lesson, right? Don't buy a rental car. You sell it to me for $250. I'll go sell the tires, and I'll sell all the parts, and I'll sell the seats, and I'll sell the frame, but I would never drive it around. So keep that in mind. Watch the video that we made on Richest about retail investors and what that means compared to someone who's a wholesale investor, somebody who gets in before the company goes public. And understand that once Hertz filed for bankruptcy, their stock became valueless. So if you have Hertz stock and you're watching this, do yourself a huge favor. If you can, which really you shouldn't be able to, but if you can, sell it. But when you sell it, keep in mind, you're dumping your valueless stock onto some other poor schmuck. Some other poor, unlearned, unintelligent, fiscally irresponsible person is buying your valueless stock. That is why it's so insidious that this is being allowed to occur at all. So now you can look at this situation, and you can look at other bankruptcies that come up in the news, because they're coming. They've already been happening. So many companies shutting doors. Pier 1, Hertz, all these large corporations just completely going out of business. You know, everybody was so shocked in 2008, 2009 when Lehman Brothers, the bank, went out of business. Nobody could believe it, right? Listen, nobody is above the actual market, because even the Federal Reserve, even big government, they can't escape it. After a while, these things just pile up and the pressure becomes too much for any organization, no matter how powerful they think they are, to hold back what's occurring. It's inevitable. So you have to realize that when you hear that a company is going bankrupt, you don't want to be anywhere near that. Why would you bother? In fact, why would you even bother with that when there are so many other good investments like precious metals or laser funds or even real estate? Once the prices go low enough, get into real estate. Just don't buy it right now. Wait for the bubble. That'll be sometime end of this year, next year. It's going to take a while for the ripple effect for everybody to realize. But watch closely what's happening in the commercial real estate market right now. Big malls shutting down, big firms shutting down, right? And all that property is going to be left wide open. Somebody who's creative could use that. Maybe that'll be you. You'll come up with an idea of a way to make use of that. So there you go. That's what's happening with Hertz. And that's why it's going to be so painful for all those investors that are being tricked into investing in a company that has already filed for bankruptcy. And this is evidence of the false information that has been poured into the media and pounded into the psyche of the world at this point, that stocks are on the rise. Look, it's doing better. It's doing better. Look, the stock prices are higher. Oh, by the way, we're only tracking 5 stocks. But those 5 are doing really well. The rest of them are all going bankrupt, but we don't count those. It's sort of like the unemployment numbers at this point, but we won't talk about that in this video. So I hope that was helpful. Please keep an eye on this, because this is a really good example of what you're going to see a lot more of, and you're going to want to look for the opportunities of how to take advantage of that. Because whoever comes after Hertz, you can be sure they're going to do a much better job, and they're going to do it a much more conservative fiscal approach. You watch. That's what happens. All right, everybody. So thanks for tuning in. If you like this video, make sure you give us a thumbs up. And if you haven't already, subscribe to the channel. We'd love to be able to share more information with you as soon as we put up new videos. All right. Thanks for tuning in. See you next time.